Welcome back, everyone. Next, we have Steppe Gold Limited. It trades on the OTCQX under the symbol STPGF and on the TSX under the symbol STGO, and is Mongolia's premier precious metals company. Happy to introduce the Executive VP and Director, Aneel Singh. But first, we're going to start with a video. Roll it.
Hello, I'm Dennis Quaid. Today's investors are more concerned than ever about saving and planning for the future. As we're about to see, there are smart ways to make the money you earn today help prepare you for tomorrow.
Gold mining has brought great success and resources to countries all over the world for centuries, and continues to be an extremely rich and viable economic investment.
Gold mining's been around for thousands of years. It's the original money. It's tried, it's tested, it's true, and it's undeniable. In periods of uncertainty, people flock to gold as a store of value. In communities in which it's mined, it brings a lot of economic prosperity, allows people to upgrade their skill sets, brings GDP growth to areas that might not have that same opportunity otherwise.
Mining is the biggest employer in country, so it's created a significant amount of jobs in country, tax source for the government as well, and more importantly, I think education as well. It's created a lot of skilled labor force that's impacting generations to come. So it's certainly very meaningful and a big driver of the economy.
While it is relatively unknown to most people, Mongolia is a resource-rich country at a turning point in its history. Within the last few years, it has become the last frontier for large-scale gold mining projects, quickly improving economy and job opportunities.
Democratic Mongolia is only 30 years old. In the past 3 decades, our economy has quadrupled. Our current government, the Prime Minister and the President has been very supportive of foreign investments and developing of responsible mining industry. Our mining industry makes 1/4 of our economy, over 70% of foreign direct investment, and over 90% of our exports. Mongolia has full resources of coal, copper, gold, and iron ore, and many other minerals. 70% of our territories remain undiscovered to geological surveys, and mining license has been issued to only 1% of the territories.
Mining in years gone by had developed a reputation for exploiting local resources and not giving enough back to its host governments. We're no longer in that world. You can't be a proper listed mining company with all the disclosure and the obligations and not be a great partner, not take care of your host governments, your workforce, and give back to the communities. If you want to generate a return through gold mining and mining in general, you need a great mineral endowment and an environment which is supportive of unlocking that mineral wealth. And that's what we see in Mongolia. We're only seeing the start of the mineral potential in the country, and I think the government sees that potential, the host communities, and together we can unlock a lot of value for investors as well as for the country.
Gold is a historically safe investment for economic growth, and the industry boom in Mongolia is the proof.
We're glad you could join us today. I'm Dennis Quaid. See you next time.
Okay, you're live.
Excellent. Well, thank you everyone for joining today's presentation on Steppe Gold. And as you saw from the video at the beginning here, we are a gold and silver producer today. So we have been in production since April 2020, and we're now expanding into our much larger reserves below the oxide, starting about 40 meters, which will come online in the first half of 2025, taking us to over 100,000 ounces per annum of production, with currently a 12-year mine life at about $900 all-in cost. Today, we're producing at a run rate of 25 to 30,000 ounces. All right, and sorry for that technical issue, but I'm back. As I was mentioning, we're currently in production. This year, we'll produce about 25 to 30,000 ounces. Same for next year, while bringing a much larger asset online. So we are a producer generating cash flow today, 25 to 30,000 ounces per annum this year and next. at about 800 to 850 all-in cost. And then we jump up in our production profile, triple our production profile, starting in 2025, producing for over 100,000 ounces for over 10 years, 12 years of mine life today, and still growing, with a lot of exploration upside, both in Mongolia, but now in also Peru, with an acquisition we closed at the end of June, which I'll get into shortly. So Steppe Gold, listed on the main board of the Toronto Stock Exchange. We listed the company in May 2018 at $2 a share, when gold was around $1,250, $1,300, and we had a greenfield asset. So we hadn't built a mine. We had build risk, capex risk, finance risk, permit risk. Roll around to April 2020, at the height of COVID, we brought production online for the first time ever. Our first quarter of startup ramp-up production in Q2 2020, we produced 15,000 ounces at about $740 all-in cost. So a fantastic start to production. We produced around 35,000 ounces over that 9 months in 2020 at just over $800 all-in cost. So it's a great starter project, generates cash flow. More importantly, as we built this company from day one, we're a local company. 99% of our 350 contractors or full-time employees are Mongolian in country. That allowed us to not only build the right strong relationships locally, provincially, and federally, but allowed us to bring production online when you couldn't get in the country for almost 2 years. So as in any business, it's very important to be local. And our team has worked in Mongolia since 2009, previously building another company called Hunu Coal. That was a $20 million IPO in 2010 and a $500 million cash sale in 2011. So we certainly have execution capability and a track record of success in Mongolia, starting with Steppe Gold now in 2016 and in 2016, 2017. We've now built our first mine. We've increased our resources and reserves, and we're building our second and doubling our workforce from around 350 to 700 over the next 2 years. I'd like to get into the capital structure, very important. Today, with the acquisition we just closed with Peru for another 2.5 million ounces in Peru, we have, and that was an all-share transaction, we have about 104 million shares outstanding. So fully diluted, we're roughly 110 million shares outstanding as a producer. That's significantly growing over the next couple of years, and might I add, has full funding for that expansion for phase 2 in Mongolia. We announced $150 million US project financing package in July, which allowed us to mitigate and not have to raise a lot of dilutive equity at these very low levels. As everyone knows, the markets are quite weak, but we're in a position of having production cash flow and having raised majority of our equity at much higher levels. As I mentioned, we listed the company at $2 a share. Back in April 2020, when we started production, we were 90 cents a share. And we moved to about $3 by August 2020 within a few months, just on commercial production. Today, management and board own close to 25% of the company. We have never sold a share, and we've been public since May 2018. We have blue chip long-term investors like Eric Sprott here in Canada, who owns just under 11% of the company. His first investment he made for $15 million was done at $2.15 in August 2020, and he's followed on with on-market buying at the end of last year, and our last equity placement in May at $1.10. So very supportive long-term investor. Fidelity International owns close to 6% of our company. Elliott out of New York and Triple Flag as well. And then we have Lim Advisors out of Hong Kong. Very solid long-term investors. And I wanted to add that most of these investors obviously have a cost basis that's double or triple our current share price and aren't sellers. So that shows you the alignment we have as a board and management team, and also with our blue chip long-term investors. So I want to go back into the timeline here of how we started and where we're going. We started the company privately in 2016 in Mongolia, early 2017 in Canada, acquired our first 2 assets in 2017. Our leading asset is the ATO project in Mongolia. We bought it for $20 million US from Centerra Gold. Back when we bought it in 2017, it was a 1.2 million ounce deposit. That's the total global resources on a gold equivalent basis, inclusive of 210,000 ounces of reserves. Today, and we've only drilled down to about 350 to 400 meters, we stand at just under 2.5 million ounces of resources, inclusive of 1.7 million ounces of reserves. So we've significantly grown the asset from since we acquired it to now validate our expansion for phase 2, yet we're still drilling below these deposits, and we've seen extensions and new discoveries. So we're very comfortable in saying that when this phase 2 expansion comes online in a couple of years, we'll be able to extend the mine life beyond 12 years and even increase the production profile, which already has 120,000 ounces for the first 5 years, and extend that and potentially increase that over time. So in 2018, we listed the company, as I mentioned, at $2 a share. Over that time, between 2018 and the end of 2019, we built the mine, the heap leach operation, for $25 million US. We got it fully permitted, and we brought it online in April 2020, just after winter, very successfully. Now, in all of that, as I mentioned, we produced 35,000 ounces in 2020. In 2021, we only produced around 12,500 ounces. And the reason is we had no technical issues. We had no operational issues on this asset. It's a fantastic high-grade oxide mine. However, supply chain issues hit us probably before the rest of the world, given we're located next to China. And the land borders with China remained closed for a couple of years. Our reagents that we bring into the country, so import, came all from China, and the borders were closed. So we were stuck for almost a year. And for those who've seen the stock chart, you can see from summer of 2021 until early 2022, our stock drifted. People assuming that we'd have to raise equity to bring production back online. Well, we didn't, and we actually successfully brought production back online in March of 2022. We solved the issues on supply chain by dealing with the same suppliers out of China and sending it out to South Korea and actually up to Russia and using their logistical channels. Not Russian product, but certainly we used 2 different logistical channels. They've been very successful to date. Since we restarted production in March 2022, we haven't had a single hiccup. So we're currently in production. So we've been producing for 18 months without any stoppage and generating cash flow along the way, and robust cash flow that has fueled the growth of our company. So that's been a great win and solution, I guess, from that downtime we had. But during that downtime, we continued to mine, crush, stack, and we put out a feasibility study at the end of 2021 that defined this phase 2. And the Bank of Mongolia gave us a debt package that allowed us to do some of the phase 2 construction, which I'll show you. And you've seen some of the pictures through that video. So we have moved fairly quickly. We've solved our issues. And just this year, we've been very active with an acquisition of 2.5 million ounces in Peru. It's a very similar deposit to what we have in Mongolia, where you have oxides at surface and sulfides below. The oxides and leachable sulfides at surface are over 600,000 ounces. So it's actually 3 times the size of our phase 1 in Mongolia. In fact, the NPV of the phase 1 operation in Peru at $1,700 gold after tax at 5% is about 160 million US. And at $1,900 gold after tax, about 250 million US. And to remind viewers, we're a producer already, and we have a NAV of about 300 million US in Mongolia as well on our producing and expansion assets. And we're currently trading at about 0.17 times NAV or $17 an ounce. So there's a significant upside here, given our peers trade at 0.6 to 0.7 times NAV, and roughly about $60 to $70 an ounce in the ground. And now we have close to 5 million ounces. So for those who aren't familiar with Mongolia, Mongolia is home to world-class discoveries and a mine. That's the Oyu Tolgoi mine. That's operated by Rio Tinto. Rio Tinto has committed quite a lot of capital in the last year to the expansion of that project. It's one of the biggest copper mines in the world. I think it'll be top 3 or 4 copper mine in the world when the expansion is complete. So you can discover world-class assets and build them. And that's what we're trying to do with Steppe Gold here on the precious metals front. Mongolia is relatively underexplored, resource rich, and we think it's kind of the last frontier, and we have a good handle. And in fact, as a country, you have a very solid democracy. that a functional democracy since the early 90s, with parliamentary elections every 4 years, a very supportive government for mining. Mining is the #1 driver of taxes, GDP, employment in country. So they take it very seriously, and they want companies like ourselves and others to invest. In fact, CNN did a 3-part series from Ulaanbaatar just 2 weeks ago. Quest Means Business was shot out of Ulaanbaatar. They're live. They went to the Oyu mine. They met with many members of business and government, and also confirmed how the U.S. is investing a lot more into the country for this mineral wealth. So we're certainly in the right jurisdiction. You don't have the volatility of governments that you've seen in African nations and some places in Latin America. There's no violence or terrorism. So it's definitely a place to be, and it's strategically located next to the big superpowers of China and Russia, which actually allows us to be more important to the rest of the world. And that's why Canada, the US, Germany, Korea, Japan, India are all big investors. France, actually, Macron was just there over a month ago, and Elon Musk as well, speaking to the Prime Minister about doing things. So we're certainly in the right area, and we have a lot of Western partners that we don't need to rely solely on our neighbors to the north and southeast. Just want to highlight here the 3 deposits that are currently in production, ATO 1, 2, and 4, are from surface, oxidized caps, right down to about 35-40 meters. Below are the sulfides that you can see here that go down to currently about 350 meters. These red boxes you can see here are our new drilling that aren't included in the current mine plan or feasibility study or any resources or reserves. So this is what I mentioned earlier about the opportunity to continue to grow this asset. These are meaningful intercepts and new discoveries below the current mine plan and deposits, and grades that we're seeing that are 10 or 20 times higher. So we're very encouraged. We do believe, as we took this 1.2 million ounce deposit and essentially doubled it, that it can gain over time. But we don't need to do all that drilling now. We'll continue to self-fund from our cash flow as the phase 2 operation comes online. We can continue to drill at depth to grow this deposit, hopefully into 15 and 20 years plus, and also step out on the other 90% of this mining license. So we have started our first oxide drilling program to extend the oxide mine life, because that does run out in 2 years' time. So it does sequence well with the phase 2 operation coming online also in 2025. So there'll be no stop in production. But a big win would happen if we actually uncover more oxides on the 90% of the mining license that we haven't drilled. So we've now kicked off a shallow drilling program to hopefully uncover more oxides on the property where we already have an operating plant. So it's very low cost ounces that we can bring to our plant and extend the mining life. And in an ideal world, if we do hit and find new discoveries and deposits for oxides, then you can have the phase 1 and phase 2 operation running at the same time for hopefully a few years, which means our production could be, circa 150,000 ounces plus a year if phase 1 and phase 2 are operating 2025 and beyond for a few years. And, that's all optionality, no guarantees there. I already talked about the economics here, but it is a funded program. I want to highlight that. We raised $150 million US last month. We're going to start to draw on that capital later this month for this phase 2 expansion, where we've already built the fixed crushing circuit for phase 2. So this installation is already complete. Will come online later this year or in the new year. And then we have to build a flotation plant, a tailings facility, a power upgrade, and finish camp expansion. All of that will be funded from debt. And we avoided the non-dilutive equity. And the reason is because we're owners ourselves. We've seen the market move, and we believe when the market gets better, the opportunity exists for new investors, obviously, to get in at these low levels, however long they last. But we're not in a situation where we need to go raise some massive dilutive equity at these levels. Now, our second project in Mongolia, we also acquired in 2017, is a highly prospective exploration license, 14,400 hectare exploration license. You can see here in the gold, here in the middle. And it's highly prospective. We've hardly done any work on it. We've done surface work, IP magnetic, soil sampling, trenching, that have yielded results of 1.5 grams gold, 450 grams silver, 3% copper, 4% lead. So very encouraging. What's also very encouraging is the licenses adjoining us to the blue, to the north and the south. So they're about 4,500 hectares each, and they're held with another company called Erdene Resources. So our peers, Erdene, have done very well in exploration in this region, this new gold district in New Camp. They have over 1 million ounces between the two licenses, a mining license, the license to the south, and a feasibility study on that as well. So they're looking to put that in production over the next couple of years. I think it's about 450,000 ounces they'll put into production, 7 or 8 years at 70,000 ounces. They've actually signed a joint venture with a local Mongolian company for 50% of these assets. So we're in the right area, and this could be our next project in Mongolia to focus on once phase 2 is up and running. Certainly the locals here in this province want us to replicate what we've done in Dorno province of Northeast, from greenfield to creating the jobs and sustainable jobs over long term. So we're doing really good things in Mongolia. So that's Mongolia in a nutshell. ESG comes across everywhere these days, and it's something that's very important, but it's not something that's required by investors, that force us to change what we do. This is how we build our business. So from day one, we were doing all the right things from the ESG perspective. That's why you saw that video that was put together at the beginning. We were chosen because we're doing the right things. We're educating. We're doing things from environmental and governance side. It's something ingrained in our culture that you would do anyways without anyone asking you to do so. And that's just the proper way to do business if you want to be a sustainable miner. Most miners already do this. Now, the other acquisition I mentioned was the Anacortes Mining. This is in Peru. So this is this allows us to be a multi-asset, multi-jurisdiction company. We've now added 2.5 million ounces in Peru. So on our balance sheet, we're just under 5 million ounces between Mongolia and Peru. And Peru, we're in a highly prospective region where there's producing mines in northern Peru here. It's a project that had a value of about 125 million about 18 months ago, and we were able to acquire for 20 million Canadian of stock, or $6 an ounce. And it fits very well into our production pipeline, development pipeline, and production profile, where it's not going to require a lot of resources over the next couple of years. We'll chip away at defining a feasibility study for phase 1, advancing permitting, and of course building that social license as Steppe Gold down here in Peru. And in 2026, I would say, when cash flow is robust, we've paid off a significant amount of our debt, we can then self-fund the equity component to go build the phase 1 operation here. And I mentioned how lucrative that is. That's about 7 years at 70,000 ounces, $750 all in cost, and after tax NPV today, just updated a few weeks ago, of about 160 million US after tax at $1,700 gold, and almost doubles at spot pricing. So that's fantastic opportunity. So we now have an attractive asset portfolio. We obviously show well against our peers, and on a valuation basis, we have a clear path to grow our production to over 200,000 ounces over the next few years. And in all of that, I wanted to highlight that we are in the process of working on a dual listing in Hong Kong, where we are only going to be one of 7 precious metals companies traded there. That's a very liquid market. The valuations are much more robust than in North America at the moment. We are an Asian producer, so we're well understood. We're not a frontier or emerging market for that investor base that loves precious metals. It's in our culture, and that should be a big catalyst, an event for our stock as well. So quite a lot in the pipeline in terms of milestones and catalysts. Drawing on capital for our phase 2 expansion over the next few weeks. We'll show people that we are funded and we are drawing and continuing construction for phase 2. Any updates on exploration from our oxide drilling program that could essentially potentially extend our mine life? We're certainly excited about that. The Hong Kong listing as well, very excited about that. And in the future, there could be other future M&A in Mongolia. So that's the Steppe Gold story in a nutshell. And thank you for taking the time, and I'm open for questions.
Great job, Aneel. Yes. A few questions from one. Roger Strickland asks, is gold your main commodity or are you mining others?
So we are mining currently gold and silver only in our phase 1 operation. In our phase 2, 30% of our production will come from base metals, lead and zinc as well. But we are primary focused on precious metals, gold and silver.
And Catherine Farmer asks, what's the larger asset that's coming online? Gold as well?
Yeah. So the larger asset will be 70% precious metals, 30% base metals. So mainly gold. It's about 60% gold, 10% silver, and about 30% mix of lead and zinc. So it's mainly still gold, yes.
And Scar Shepherd wants to know, are all of your properties producing? And can you break down the proven assets in the ground by property?
Yeah, so only our phase 1 operation in Mongolia is currently producing and has been producing since April 2020. The second asset is underneath, so on the same footprint and same deposit, starting from about 40 meters below surface down to 300, 350. That will come online in 2025, which will be 3 times our current production profile. And then Peru won't come online for a couple years after that. So currently, only one producing mine, which will expand in over the next 2 years. So, and then we'll be a 3, I guess, in probably 2 more years after that. And our reserves on our current operating mine run out in 2 years after we produce about 70,000 ounces if we don't find any more. However, our reserves for the next mine is over 1.5 million ounces, which back up 12 years of production at over 100,000 ounces on a recovered basis. That's for that Mongolia. And then we have obviously all the resources and reserves, resources in Peru. That's 2.5 million ounces, 600,000 ounces in phase 1, 1.9 million ounces in sulfides below, which we're not valuing. We haven't done the work on. So those are later stage things.
And John Niss asks about Barack walked away from both Lagunas Nortes and the Tres Cruces property. So what does Steppe see that Barack didn't?
I'm not sure who Barack is, but Baru owns, if it's Baru he's referring to, they own Lagunas Norte. So they actually bought Lagunas Norte. So they didn't walk away from that. And then we've been tracking Tres Cruces for 2.5 years. So we saw the opportunity. No one walked away from it. We acquired it because there was an opportune time where investors wanted to see a change, and we're a producer. So we're adding real value by combining that with our company, and that can self-fund that development down the road.
Thank you for that.
Yeah.
And Howie Flinker asks, did you lose 30,000 ounces in 23? Can you clarify? You publicly stated output would approximate 55K to 60K in 23. Can you explain that?
Yeah, we downgraded our forecast a few months ago back to align what our current reserves are. Because our current reserves are only 70,000 ounces, we've focused on 25 to 30,000 this year and 25 to 30 next year. That could be better because we did 40,000 ounces from March of 2022 to March of 2023 this year. So we've proven that we can produce 40,000 ounces over a 12-month period. But currently, it's better to scale back to what we're really what we really can handle. Now there could be an uptick in that. We've seen higher months, but we've rolled back our forecast, and it's not whether we produce those now or we'll produce them later. They're all there, so we haven't lost any ounces. To be clear.
Perfect. Thank you for that. Sinai Fernandez wants you to explain your raise as non-dilutive equity and debt. Is it simply interest and principal payments without a convertible mechanism? Can you break that down?
Yes, absolutely. So there is no convertible mechanism into equity with that project financing. We didn't raise any equity at that time. That was the package, the best package for our shareholders, by not being forced to raise equity at the time you draw on the debt. So it's all debt with interest only payments until 6 months after production starts for phase 2. So our current cash flow will service the debt service from the new draw of debt from phase 2. And then we'll start principal and interest payments, principal in addition to the interest payments 6 months post commissioning of the mine. So funded from our cash flow from the mine, we'll pay back the principal.
And Dion Nichols asks, what's your cost per ounce to produce in Peru and Mongolia? And what are you selling them at? Plus, where do you see your production costs going?
Yeah, good question. So as I mentioned, our all-in costs, so cash costs plus at site, plus all corporate G&A, everything net is about $800 to $850 all-in cost today for an ounce. So we have a $1,000 margin today. For phase two, it's going to be a bit higher. It's a bigger operation. It costs more. So it's going to be about $900, maybe $900, $950 to be safe and conservative. Still about $1,000 margin. Today's prices. So highly robust margin for current operation and our expansion. Top quartile in terms of cost. And all of our gold and silver since day one has been sold in country to the Mongolian Central Bank at market pricing. So at spot price. We don't require any discount, nor do we need to offer one. The government wants the gold, and we're helping them, and we don't have to export. And the royalty regime also favors selling the gold and silver in country because it's 5% government royalty. It's 10% if you export.
Fantastic. Last question from Jerry Schmidt. Jerry wants to know, what's the end game? Are you going to keep producing? You're going to sell the rights? Talk about the expected life of these projects.
Yeah, listen, our team's entrepreneurial as well. As we saw it from Hunu Coal, we built and sold the company for $500 million in 18 months after it's public. Matt, my partner, who's the co-founder of the company here as well, who was the exec chairman and founder of Hunu, has built a copper company in Brazil, sold that for another just under $500 million as well. So we're entrepreneurial at the right price and time. Sure, we're nowhere near that today in terms of pricing because we own 25% of the company, and our investors, majority of them have come in at $2 or above. So we don't have no reason to sell at these levels. We're looking for the best value. So the beauty of being a cash flowing company, once our growth comes online in phase two, we'll have excess cash flow. So you can buy back shares, pay a dividend, be a dividend payer, pay a special dividend and excess cash flow as well. And that's a path that we can continue for 20, 30 years as we bring more production online. Or do that while you wait for the right trade sale to a major who wants our pipeline and wants to take this and run the show for 30 years. Again, if it's the right price, if everyone can win together, then we'll obviously consider that. But we have two paths, I guess, not just one like many other companies.
Perfect. Well, do you have any quick closing remarks for us today, Aneel?
Well, thanks everyone for taking the time to hear the story or the update for those. We're always accessible. Contacts here in our website. So please reach out if you ever want to have a one-on-one call. All I can say is, we are an aggressive team. We're dynamic. We've worked through a lot of challenges, and there's not many companies that are producing and tripling their production profile over the next couple of years, yet still have exploration sizzle and upside that any other Explorco offers, and the beauty of having put together a funding package that's almost unheard of in a tight market like now.
Well, great presentation. Thank you so much for joining us on our conference today.
Thanks for having me.
Okay, everyone, stay with us. We're sorry to announce that 22nd Century Group had to postpone their presentation. They will hopefully be appearing on our October 4th and 5th event, but we'll be back in 30 minutes with GPO Plus. We'll see you soon.